The US dollar has dropped to its lowest point. Trade negotiations between the United States and Japan remain at a standstill, and American businesses are struggling under the weight of increasing tariffs. Is the US economy entering a warning zone? For the week ending April 18, 2025, the US dollar index, DXY, dropped to 99.23 points, marking its lowest level since 2022, according to Bloomberg. The primary reason is market expectations that the Federal Reserve will continue to cut interest rates, driven by concerns over slowing economic growth, combined with mounting public debt pressure. A weaker dollar is prompting international capital to shift away from U.S. assets. For both American citizens and the global community, the depreciation of the dollar carries numerous direct consequences. Imported goods become more expensive, leading to rising prices for food, energy, and electronic products. Individuals traveling or studying abroad are also facing higher costs. Major investment funds have reduced their holdings of U.S. government bonds and equities, pushing bond yields higher and contributing to increased volatility in the stock market. This reflects a waning level of confidence in the U.S. economy. Furthermore, domestic borrowing rates could be adjusted unfavorably if investors begin to demand higher risk premiums. Trade negotiations between the United States and Japan are facing considerable challenges, as the two sides have yet to reach an agreement on lifting elevated tariff levels. Currently, Japan is subject to a 25% tariff on exports of automobiles, auto parts, steel, and aluminum to the United States, along with a base tariff of 10% applied to most other goods. These high tariffs could lead to rising prices for various products, particularly imports from Japan, such as automobiles and electronic equipment. This may affect consumer spending and diminish purchasing power. Japanese Prime Minister Shigeru Ishiba has expressed that these tariffs are unnecessary. He also warned that the tariffs could cause significant harm to Japan's economy, which heavily relies on exports to the United States. Specifically, Japan exports approximately 1.37 million vehicles to the U.S. annually, accounting for 28.3% of its total exports to that market. Small businesses across the United States are under significant pressure from newly imposed tariffs, particularly those reaching up to 145% on imports from China. These steep duties have sharply increased import costs, forcing many businesses to raise their retail prices. For instance, the sportswear brand Cuts Clothing has had to raise product prices from $50 to $79 in order to maintain profitability. Many of these small enterprises lack the financial capacity and infrastructure needed to relocate production back to the United States. As a result, they are facing order reductions, postponement of expansion plans, and in some cases, staff layoffs, factors that directly affect employment and workers' income. The Russell 2000 index, which represents small-cap companies, has declined by more than 20% since the beginning of the year, reflecting the substantial impact on this sector.